I only have $25,000 in life insurance. Hello, I'm Kevin Canals, an independent health and life insurance agent in California. And some people will be surprised to learn that I only have $25,000 total in life insurance. Now, in years past, I did have more. When my son was growing up, going to school, in college, I had term insurance, hundreds of thousands of dollars, because I wanted to make sure that there was going to be enough money for him to get through his education and pursue a career that he wanted without, too much stress of, money. But once he was done, I didn't really see a reason to carry a whole bunch of life insurance, whole life term or otherwise. But I am one of those people. If I have a party, if I throw a big party and, dishes, plates, all kinds of stuff, I'm going to be the one in the kitchen cleaning up, because I don't like to have other people clean up a mess that I may have made. Even though if I participated and had a great time, food was wonderful, I just have this thing about making sure that other people don't have to deal with all the dirty dishes. And that kind of spills over into my life philosophy. So when I die, I don't want people to be burdened with, okay, where are we going to get the money to pay for the cremation? How are we going to do this? Well, what is this bill? We got to pay that. I want enough money to help those people take care of my final expenses. And that's what a lot of people consider these small life insurance policies to be final expense insurance. So I came to the conclusion of mine by going through kind of what they call it a needs analysis. But, looking at the cost, I figure a burial or cremation, celebration of life, it was going to cost about $12,000. That's probably on the high side right now. But, there's going to be inflation, so I'm trying to account for that. Then when I die, and who knows how it's going to happen, when it's going to happen, there may be other costs, other expenses that need to be cleaned up. But, I still have like a little car loan. There's taxes that need to be paid. Credit cards, I'm really good at just sometimes buying an old clock or a book or a map that's kind of expensive. Rent, utilities, a lot of things associated with my business, and all of that, I figured to get someone through before they're able to shut all of that down would probably be about $10,000. So that comes to $22,000. Fingers crossed, I have about $5,000 in savings that someone can get to easily. And so hopefully, if I just died tomorrow, people would only have to use about $17,000 of the life insurance that I have on me to pay for all of those, because sometimes it's, there's all of a sudden these things that are due, these bills are coming in even though you're dead, and they need to be paid, and I don't want other people to have to scramble around to find, how do I need to take out a loan? Do I need to beg and borrow to get money to pay some of these bills? And so that's what final expense insurance is all about. For the most part, some people use final expense to, gift, donate money to grandchildren, children, churches, nonprofits, charities, because they have enough money in the bank, the liquid assets, to cover the final expenses. But final expense insurance is kind of targeted to people who are, 50 to 85 years old. They are looking for a life insurance policy that, when they die, will provide some funds to take care of those final expenses, depending on whatever it happens to be. Now, final expense insurance, and that's kind of what I have, it is a whole life policy So it's kind of building cash value. It's permanent. So it's not ever going to terminate. It's not like term insurance. It's going to be there and all the way through, as long as you keep making your monthly or annual premiums. And the premiums aren't going to change. Once you're issued a policy and it's, you know, $50 a month or $75 a month, it's going to be that forever. You know, you don't have to worry about that. And it's simplified issue in terms of, and I'll get into that, but there's not a lot of rigmarole. There's no bloods and getting a medical exam. Final expense insurance is not pre-need funeral service insurance where you sign a contract and, you know, maybe it's $10,000 and it goes to the funeral home. No, final expense insurance is like a normal life insurance policy. You're going to assign a beneficiary or multiple beneficiaries, and that money goes to that individual, hopefully a friend or family member that will be able to take care of your final wishes and, you know, pay for all the stuff which is it's meant to do. But if everything's taken care of because of other cash, then that person, family member or friend, just has that death benefit. You know, they've received that. Final expense insurance is not a funeral trust, and again, it's not term insurance. It's permanent. It's going to be there. Now, there's a couple different types of this final expense insurance within the umbrella. One is they call level death benefit, and what that means is that as soon as the policy is issued, if you die the next day, it pays the full face value of whatever the life insurance is that you've taken out. If it's $5,000, $20,000, $30,000, boom, it pays it. Another version is what they call graded, and it's a graded death benefit. So if you die in the first year after having taken out the policy, they may only pay 30% of the face value. Second year, they pay 70%. And in the third year, they'll pay 100%. And, you know, till you do die. But it's graded. And that's to kind of hedge their bets on risk. There's also a type called modified. And with the modified, if you die in those first 2 years of having been issued a policy, the insurance company returns all the premiums you have paid in plus interest. So it's kind of even. That kind of eliminates some of the risk that that they were paying $100 a month and, you know, they don't get anything. But no, you get the premiums plus interest in a modified contract final expense. Now, I mentioned this final expense insurance is simplified issue. The big thing is that you don't have to have a medical exam. You don't have to go to an office and get weighed. No one comes to your house to take your measurements and draw your blood. You just have to be honest. And, you know, was born in this year, and I'm this height, I'm this weight. I consume a couple beers a week. You know, I haven't smoked. You know, those kind of questions. They will ask about chronic illnesses, where you have diabetes, if there's been any recent hospitalizations, or if a doctor has asked you, you know, you should have surgery. Any past major events like a heart attack or stroke, you have to reveal that. If you're living in a skilled nursing facility, and even if you're in a skilled nursing facility, that isn't an automatic denial. I mean, goodness gracious, my dad lived in a skilled nursing facility for almost 10 years before he passed, and 10 years before that when he was at home after his stroke. So people can live a long time. Our healthcare system is very good at keeping people alive, even maybe when they're not really happy about it. They may ask about it if you participate in any extreme sports or hobbies. My extreme hobby is sometimes buying a clock or an antique book that costs too much money. And of course, prescription medication. So, and they'll just look at that, and then they'll look at the Medical Information Bureau to, kind of just make sure everything matches up. The goal, the insurance companies want to issue these life insurance policies. They just have to make sure that there's acceptable risk there. But it's not like a regular term insurance for $500,000 or $1 million where they're getting, your cholesterol's too high, so we're just not going to issue, we're not going to give you a policy, go someplace else. So that is kind of the simplified issue part of it. Now there are final expense plans that are guaranteed issue or guaranteed acceptance, and those they may have like smaller age ranges. So, you might be 80 years old and apply for a final expense insurance and get it. But under guaranteed issue, some carriers may limit the age to 70. Okay. They're going to have higher premiums. And they will usually be graded or modified, meaning within those first 2 years, you're not going to get the full face value. But if you feel good about life and you're willing to say, okay, the first couple of years ain't going to end, but it's going to be there in place, maybe that is acceptable on your part. So what do these rates kind of look like? So for a female, age 62, no tobacco, last 12 months, standard health, $5,000 death benefit for a level policy, level death benefit, $18, per month. Modified, where those first 2 years you're not going to get the full $5,000. It's going to be $22 a month, and guaranteed issue would be $26 per month for a $5,000 death benefit. And then you can see as you go up to $15,000 and $25,000 death benefit, the monthly rates increase, and as you go over through the modified and guaranteed, they also increase. Because if you're being offered a modified or you go for a guaranteed acceptance, there's probably some health issues and whatnot, and that's all that the life insurance company, is willing to, that's the risk they're willing to accept. A male age 65, no tobacco, standard health, $5,000 death benefit, you're looking at $30 per month. In a modified version where you don't get the full death benefit for the first 2 years, $35 per month, and guaranteed issue $43. Now, you can see that a 65-year-old for $25,000, it's going to be over $100 per month. If you have some health issues, for the modified, might be $178, and guaranteed acceptance, you're looking at over $200 per month. And then that's kind of, do I want to pay that much money? Maybe just stick it in savings. And that does lead me to the analysis, the opportunity cost of taking money on a monthly basis or even an annual basis and putting it into life insurance versus just saving it. Okay, the opportunity cost of one or the other. So in this little example, if someone took $50 per month that they might spend on final expense, $600 annually, after 20 years, they would have $12,000. That might be more than a final expense insurance policy. If they were able to get 2% interest on those deposits, they would have accumulated $15,000 in 20 years. And if you were able to pull in 4% interest, you're looking at about $20,000. And that might be good enough. But of course, that means you're diligent, you're persistent, and you put that money into an account every month or annually to build up that reserve. And of course, one of the costs built into the premium for life insurance is that they will pay the full face value. If you die, definitely for some of the plans the next day, or within 3 years or 5 years. So if you died within 5 years, you would have only had the opportunity to save maybe $3,500, but if you had a $10,000 policy, and certainly the insurance company, if you die within 5 years, never accumulated enough money to equal the payout. So that's one of the things you're buying with a whole life final expense life insurance policy. But there's a lot of things to consider. Again, not everyone is taking out final expense insurance to cover the cost of cremation, burial, funeral. They want to leave a legacy. They want to donate money to their favorite charity church or leave it to their grandkids they've become particularly fond of. So that's kind of the landscape. I have $25,000 and I figured that's going to be good enough. If you have any questions or comments, you may leave those down below. You can go to my website and contact me through email or phone number if you have any questions, because this isn't something you should rush into, but something that takes time to think about what's going on in your life, because you do not want to make a decision that busts your monthly budget, because that's very, very important. You need to find a final expense insurance that works for you, that doesn't push you over the edge on your monthly expenses. So for InsureMeKevin.com, I'm Kevin Knaus.